Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Palantir Technologies Incorporated, stock ticker PLTR. As we can see here, we're starting to show a bit of a consolidation formation near the stock's upper trading levels. Overall, we have started to form a bit of a trading range here that can be defined by a few different support and resistance zones. But ultimately, we're starting to consolidate here at these upper levels. And we do need to identify some important support and resistance zones so that we can identify some better trading entries here going forward. So first, what we'd be looking at would be the indicator reading itself, which does currently show a bit of a rising wedge or possibly a symmetrical triangle type of formation here. What we are seeing is that overall momentum has been positive since roughly the June 24 trading period, when prices were trading back toward 23.30. At the same time, however, we have seen some evidence of declining stock price momentum stretching back a few days earlier, which is also currently valid and has not yet broken to the top side. Overall, we are sort of coming into the apex of this triangle. So we will need to see a decisive point here relatively soon. Currently, what's interesting, though, is that we're trading at roughly 56 and a half in the relative strength index, which is surprising because this is essentially the midpoint of the histogram. Remember, the RSI goes from a scale that's based on 0 to 100, and so 50 would be the midpoint. And we're currently trading at 56 here. So it's interesting because, we're also, you can just look at this price chart and see, this is not exactly midpoint type levels here. We're trading at the upper end of its range. So this is an interesting development here because it does suggest that we have some fair amount of room here to extend in both directions. I mean, there's really not a clear indication here which direct, based on the indicator reading alone. There's not much indication here about where prices would be most likely to travel because there's sort of an equal framework here as far as possible extensions in both directions. So there is evidence here in both directions, and then the relative strength index itself is at nearly the midpoint. So what this does tell us is that if we do start to see a more decisive break here, we could see a significant amount of follow through in whichever direction the break occurs. Currently, the level that I'm watching to the downside comes in at roughly 27.70. There are a few different reasons that I'm pointing out this level, and I have mentioned this level in the past. In particular, we can see that this price point does mark the 23.6% Fibonacci retracement of this dominant price move. We can kind of drill back out here for a moment and see that my main support level here for this stock comes in at $20.60. So this is the price point to the downside that I use as the basis for this trend wave. And then to the top side, we can see these recent highs coming in just below $30 at $29.83. So this essentially marks the dominant trend wave here. We can see that this is the trend wave that has the most sort of influence on share prices currently. And if we were to break this 2770 level, it would mean that a couple of different price breaks are occurring at the same time. So essentially, we have this 23.6% Fibonacci retracement. That's this red zone here. And then in addition to that, we do have the price lows from July 22nd, which posted at 2769. So right just below 2770. And then in addition to that, you also have this rising purple line here, which is the 100-hour exponential moving average. So there are several indicators here that are pointing in the same direction. And for this reason, I am viewing this as the main support zone to be watching on the downside. If we did see a break into that area, I would consider buying the stock there, depending on what the indicator reading looks like at that moment. But if we did see a break below there, I would consider that to be a very bearish event, and it would essentially suggest that a near-term top is likely in place. So there are a few different factors here to watch, and in my view, that 2770 level is very important. So it will be kind of critical to watch what is going on with the stock when it sort of approaches that area again, if we do approach that area again. To the top side, the next resistance zone really does come in at 2960. This is a level that was tested 2 different times in anticipation of this $30 mark. And then from there, we do have to look at this 2983 level as a potential supply zone that could start to develop if we do start to see a more forceful approach of this $30 mark. Overall, the broader trajectory here does remain to the top side. However, there are several major stocks in the technology space that have been sold off strongly quite recently. So we can't just expect Palantir to be immune from that type of selling pressure. We do have to remember, on a price to earnings basis, this is a very expensive stock. A lot of people are kind of focused on just the share value itself. It's only $28, so that seems like it's priced low or something like that. But from a fundamental perspective, there are real issues with the valuation as far as price to earnings metrics are concerned. That does not mean that I don't think the stock can extend further. It just means that we shouldn't believe that the stock is going to be immune to downside price movements in the broader market just because we might have a bullish outlook longer term for the company. So there are a few issues here that need to be kind of addressed here. Currently, we are starting to also break through this parallel uptrend channel. You can argue that we did see some support here because we didn't really see it like an hourly close below this channel. So you could make the argument that that this price channel remains intact to the top side, but it will need to be acknowledged here that we have seen some price spikes into this 2770 level. And this is why this is another reason I'm viewing this level as so important here going forward. So these are the current levels to watch. This is the current market outlook for Palantir Technologies Incorporated, stock ticker PLTR.